TOCHUKWU NWACHUKWU, who is the Chief Executive Officer at Preston Consult. Hi, TOCHUKWU. Welcome to the show.
Thank you for having me.
Happy New Year. We're still in January, isn't it?
Yes.
For the fact we've not seen for a while.
True.
Welcome to the program again. Where should we start from? Tell me what, as an analyst, calibrate for me what you're seeing when you watch all those things happening. The economy on one side, politics on one side. Tell me what you're seeing on a day-to-day basis.
Okay, well, I would say that you cannot talk about the economy without politics. Politics has a very strong influence on the economy. And definitely, historically, I guess for every country, but especially for Nigeria, whenever we approach the elections, there are political risks that, we need to keep in mind. And I think in this particular case, this particular year, I think it's been heightened by the different events we have been seeing. In the earlier part of the program, you mentioned some of them, from the suspension of the CJ and the drama we have been seeing in the last 2 weeks, leading up to the suspension. There's a lot of anxiety out there, not just politically also, but for the economy. So you can imagine that ordinarily there are lots of political risks in a country like Nigeria, but given the kind of elections we usually have, especially the previous one and this current one, which have been acrimonious. The previous one was acrimonious. This current one is also, to some extent, there's a lot of, from both sides, desperation. You would expect that it will have serious consequences on the market. And we're already seeing it. We're seeing that the first thing that you'll see is capital flight. And we're already seeing that in the stock exchange. In 2018 alone, I think the all-share index lost about over 13% of its value. And the market capitalization itself lost about just over 11%. And then we'll see what happens this year. That was the pre-election year. This is the election year itself. So, well, it's not surprising that we'll have this capital flight. But what we need to now see is to what extent will that happen? Because usually investors, both domestic and foreign, are going to be worried. And like your other guest also mentioned, they'll rather sit on the fence and wait to see how things
And sitting on the fence is not also good for the Nigerian economy, especially at this time that we are suffering from a very low economic growth of plus 1%, as it were. So sitting on the fence is not even a good idea, as it were, And you talked about the political risk, which I also mentioned earlier. You know that 2018 was a pre-election year. We had some political stories that were not too good, stories around the legislature, stories around cross-carpeting of politicians, stories around not too good relationship between the presidency and other arms of government, which is also dovetailing to this one, seeing the suspension of Nnaji. How much of this story should we really take seriously? Or is this something also that will come and pass?
Well, a lot depends. We should take them seriously. Politics, like I mentioned earlier, has a lot of impact on the economy, especially in a developing country like Nigeria, where the institutions aren't very strong. We should take them very seriously, but how seriously we should take them will depend to what extent they play out. There have been insinuations that, well, let's see what happens, that the government might actually, as a result of a lot of pressure, might rescind its decision and allow the NJC do its own part and now move it to the legislature and the presidency. There are others who say that, well, government have taken its decision and there's not going back. But what happens ultimately to the economy, what we're seeing now in terms of impact on the economy are short-term impacts, which are natural. You will see that in the markets where we have, everyday data, and so it can have impacts on those variables. However, for economic growth in the long run, 1 or 2 days, 1 or 2 weeks might not have that kind of significant effect. What now matters is how long this is dragged on. Will the elections be conclusive or inconclusive? Will there be violence post-election? Definitely now, not much is going to happen because nobody is going to bring in, resources. Both portfolio investors, foreign direct investors, everybody is going. Yeah. So that's to be expected anyway.
So I may likely disagree with you when you said that perhaps 1 week to 2 weeks, nothing may likely happen because everything, everything is like a ripple. You drop something, it gradually builds up.
Yeah, not that nothing will happen. It's already expected. People already anticipate that. Well, elections are coming in February and March. So they've already taken whatever, even if these things we are seeing didn't happen, they will already have taken that cautious approach. What I now mean is in terms of medium to longer term impact, if it blows over very quickly, well, it's even this is still before the elections.
But the blowing over very quickly would have taken also a lot of dust.
Yes, because also the extent of capital flight for him. We are dwelling on capital flight alone. There are other issues. The extent also would depend on if this hadn't happened, maybe some people would have been more, how will I put it, optimistic and would not have gone. But with all of this happening, yes, the depth of the problems definitely, in terms of the impact on the economy, will be more.
Bearing in mind that our FDI dropped 36% in 2018, that's just the pre-election year, $2.2 billion.
Yeah.
Very.
And then when you compare it to what we had in 2014, which was about 11 billion or
so, and we're still saying, so you can imagine that FDI is falling, FPI is also leaving the country. At the end of the day, what are we expecting for a country that is coming out of a recession, trying to garner weight, and is still not eating well, is getting malnourished, and the politicians are, going up and down from Buhari to every other person?
Let me also say this. One of the reasons also why the investors generally, and when I say investors, I'm not referring only to foreign investors, but also local, are waiting, is also to see who emerges successful. Because if the APC and President Muhammad Buhari win the elections, there are certain things to expect. I mean, in terms of scenario analysis now, you'll expect that the government will be more interventionist in terms of the government taking up the commanding heights of the economy. You would have, like we've had in the last almost 4 years now, increased regulation. Would have more of a welfareist economy.
Which is still being criticized anyway.
Yes,
the money issue, why not go the other route? But that's a topic for a different day, though.
So, but if the other side wins, if the PDP and Atiku wins, you would expect also a more market-oriented economy, less regulation, more private sector involvement, more PPPs, more privatization and all of that. So part of the reason also why investors will wait to see where and how to go in will be, well, it could be either this way or this way. And who wins will also determine the extent or the kind of investment they will also want to make.
So from all indications, with what I'm seeing, business analysts are saying perhaps Atiku will be, PDP will be business friendly, whereby Buhari right now is not necessarily business friendly. Are you sitting on that?
Yeah, that's what I said, but well, you might not want to say they're not necessarily business friendly. We'll say they're more interventionist, more of a bigger government. I mean, it's similar to what we have in other claims. The Labour Party and the Tories in the UK. The Labour is more interventionist and all of that, while the Tories are more, conservative. In the US also is the same. The Republicans are more market-oriented, in quote, while the Democrats are more...
But the U.S. is a market-driven economy.
It's market-driven. Of course, when we say this, it's just relative.
Private sector, yes.
Because definitely the Democrats in the U.S. will probably even be more market-oriented than the PDP, for instance, in Nigeria. And I think...
Have we even gotten to that ideology to say?
So we might not actually... People say that there are no ideologies, but when you look at the two... main parties, the two major political parties, probably also because of the candidates that both of them are presenting, you see clearly that one is more state-led, government-led, bigger government, interventionist, welfarist, while the other is more market-oriented, private sector-oriented, PPPs,
allow people
privatization and all of that. So you can see that very clearly. So we might not have clear ideologies, but in this particular case, the two candidates would definitely present completely different approaches to managing the economy.
So for you right now as an analyst, perhaps from all indications what you're saying, which poses more risk, political or structural risk?
In the short term, political risk.
Political risk.
In the longer, medium to longer term, the structural risks.
Which also tells us that he's not to hurry yet with the economy. He's not to hurry yet with what we have right now in Nigeria, because from one risk to the other, structural risks have been there, macroeconomic risks have been there. We've been battling with that for years.
Yes.
This administration has said, oh, that's what we're trying to fix. Oh, they've stolen so much money in the past. No, we're trying to do this. We're trying to do that. Yeah. But we've also seen macroeconomic risk. We've also seen structural risk, then added to political risk. But for you, political risk in the near term? In the near term,
yes. And the structural risk more in the long term. I think for me, when you look at the growth we've experienced in the last 2 years, since we came out of the recession, in 2017 we grew at about 0.8%, and in 2018 about 1.9%. It's not yet fully out, but these are the estimates. It's a pity really, because I attended the budget presentation of the Minister of Budget and Planning, where during the presentation he mentioned that we're looking forward to actually be able to grow at 3% in 2019. And I felt sad, because this is a country that was growing at about 6.57% just a few years ago. And I know the saying then was that, well, we're not going to become a China, we're not going to become an African giant if we're growing at 6-7%.
That we needed to grow at
13, 14% like China did over 3 decades before they got to where they are. And here we are hoping and praying that we'll get to 3%. I think it's just a pity, and it shows the reality that we're faced with. The economy is doing very badly, and you really need a lot to get it out of there. And that's why we're hoping that in 2019, definitely the elections are not helping at all. The fact that the elections are also going to postpone or delay the approval of the budget, and then so the spending will not start until and then whatever happens, a new government comes in. Whether the current
budget has not even been spent fully. How much implementation do we have for 2018 budget?
I didn't even check the figures, but I can imagine that we haven't gone, for the capital, won't have gone anywhere close to 50%.